Imagine building the most powerful thing humanity has ever created and discovering that the biggest obstacle isn't the code, isn't the algorithm, isn't the investment, it's the power outlet in the wall. By 2025, the world's largest companies will have spent more money building data centers than the entire United States spent on housing construction. Think about that for a second. More money on servers than on houses. And yet, half of the projects planned for 2026 have already been cancelled or delayed, not for lack of money, not for lack of technology, but because the physical world simply cannot keep up with the digital world. This is the story of the wall no one saw coming. The wall that isn't made of code or politics, but of copper, concrete, water, and electricity. And as artificial intelligence advances at an exponential rate, that wall is getting higher and higher. If you want to understand why the greatest technological project in human history could be interrupted by an electrical transformer, stay here, because this story will surprise you. If you're not already subscribed to this channel, do it now. Every week we'll bring you stories like this, explaining how the world really works beneath what the media shows. Let's go back to the end of 2022. ChatGPT was released to the public, and what happened next was unlike anything the corporate world has seen in decades. Within weeks, executives across all industries realized they were looking at something that could redefine everything. And the reaction was immediate and brutal. Microsoft poured $10 billion into OpenAI. Google went into emergency mode and accelerated its own artificial intelligence projects. Amazon announced $15 billion in investments in Indiana solely for AI infrastructure. Meta began building data centers on a scale it had never attempted before. And at the center of it all was a company that, until then, most people knew only for making video cards for gamers. Nvidia has become the most valuable company in the world. By 2025, its market capitalization will exceed $5 trillion. $5 trillion. To give you a point of reference, that's greater than the GDP of every country in the world except the United States, China, Germany, and Japan. And this valuation was built on a simple premise. The world will need absurd amounts of computing power, and Nvidia is the one that will supply it. Then the arms race began, not of missiles or tanks, but of GPUs, servers, and data centers. Each major tech company trying to build more, faster, before its competitor. In 2023, global spending on AI infrastructure exceeded $200 billion. In 2024, that number nearly doubled. And in 2025, estimates point to almost $400 billion in capital expenditures alone by major tech companies. $400 billion in a single year. But here's where the story starts to get interesting. Because while money was flowing at digital speed, the physical world was moving at the speed it always has. The speed of concrete, the speed of steel, the speed of bureaucracy and permits and the electrical grids built 50 years ago. And this created a problem that no algorithm can solve. The first sign that something was wrong didn't come from a financial report. It came from the electricity bills. Think about what a modern data center really is. It's not just a building full of computers. It's a facility that consumes the same amount of energy as a medium-sized city, operating 24 hours a day, 7 days a week, 365 days a year without interruption. A single large-scale data center can require 900 megawatts of uninterrupted power. To compare, that's enough to power almost 2 million American homes. And suddenly, the world wanted to build hundreds of them. In 2024, data centers already consumed almost 2% of all electricity generated in the world. It seems like a small amount, but in absolute terms, it's a gigantic quantity, and projections showed that this number was going to explode. The arrival of generative AI, with its increasingly larger and more complex models, multiplied computational demand in ways that even experts hadn't fully predicted. So, what happened to the power grid? Well, here's the cruel irony. The United States electrical infrastructure, for example, was built over decades, designed for a completely different consumption profile. It wasn't designed to absorb the sudden addition of multiple gigantic data centers in specific regions. And when tech companies started arriving in smaller cities in Texas, Virginia, and Indiana, saying they needed hundreds of megawatts of power immediately, the power utilities had a very uncomfortable response. We don't have it, and we won't have it anytime soon. In some cases, the wait times for connection to the electrical grid reached 10 years. 10 years of waiting just to have the necessary power to run a data center. But companies needed all of this now. Yesterday, last quarter, and residents of these cities began to notice something strange. Electricity bills were rising. The reliability of the power grid was declining. In Lake Tahoe, 50,000 residents were informed that their utility company was redirecting electrical capacity to a new data center in the region. 50,000 people competing with servers for the same electricity. This was just the beginning, but there's another resource that most people don't think about when they imagine a data center, and that resource can be even more limited than electricity. Water. Data centers generate heat, enormous amounts of heat, and to keep servers running within safe operating temperatures, you need cooling systems. And the most efficient cooling systems in the world use a very simple and very finite resource. Water. A single large-scale data center can consume 3 to 5 million gallons of water per day. Some of the largest consume even more, and technology companies, in a search for cheap land and relatively available energy, have often chosen to build in regions that already face significant water stress. Arizona, Nevada, Texas. Regions that already struggle with water scarcity, that already see their aquifers dwindling year after year, that already have growing populations competing for a resource that is not growing. And suddenly, in the middle of the Arizona desert, facilities emerge consuming the equivalent of golf courses worth of water every day, forever, just to maintain the servers that run the programming language models people use to write emails faster. The reaction from local communities was one of shock. And when people understood what was happening, political opposition began to grow. Citizens went to municipal meetings, petitions were signed, some projects were blocked by popular pressure, but most continued because the money from big tech companies has a remarkable ability to convince local governments that are desperate for jobs and tax revenue. The problem is that these jobs are few and far between. $1 billion data center typically employs a few hundred people in operation, and it trades the region's water and energy for servers that benefit users on other continents. But here's where the story gets even more surprising, because even when you solve the energy and water problems, there is a third obstacle that nobody was discussing in Silicon Valley boardrooms. An obstacle so mundane, so old school, that it seems to come from another century. Electrical transformers. To connect a data center to the electrical grid, you need high voltage transformers. These are enormous, heavy, highly specialized pieces of equipment that convert grid power to the voltage that servers can use. They are engineering components weighing tons, costing millions of dollars each, and taking 1 to 2 years to manufacture and deliver under normal conditions. Under normal conditions. When hundreds of data centers began to be planned simultaneously around the world, the demand for transformers exploded, and the world's manufacturing capacity simply wasn't prepared for it. The world's major manufacturers are located in a relatively small number of countries: Germany, South Korea, China, Mexico, and suddenly everyone wanted transformers at the same time. The price of this equipment has doubled in 4 years. Delivery times have jumped from months to years. And without the transformer, no matter how much money you have, no matter how brilliant your algorithm is, the data center won't work. It simply won't turn on. And it's not just a transformer. It's the high voltage cables. It's the power backup systems. It's the industrial generators. It's an entire supply chain of specialized electrical equipment that the world has never needed to produce on such a scale, at such a speed. The trade tariffs imposed by the American government made all of this even more expensive. Many of these components come from China, South Korea, or Mexico. And with the tariff uncertainties, technology companies began doing something that seems rational but is deeply revealing: buying components they had nowhere to install, stockpiling transformers, cables, cooling systems, simply to guarantee access to them before prices rose even further or the supply dried up. Think about what this means. The world's largest companies, with access to hundreds of billions of dollars in capital, behaving like panicked consumers buying toilet paper during a pandemic, hastily buying electrical equipment with nowhere to put it, afraid that tomorrow will be too late. This is not the behavior of a confident industry. It is the behavior of an industry that has realized the ground is more slippery than it seemed. So here's the question that needs to be asked. With all this money, with all this ambition, why don't they just build faster? Why don't they just throw more capital at the problem and solve it? And here's the most important insight from this whole story. Money can buy time, not when the problem is physical. You can have $1 trillion and still not be able to build a power plant in 2 years because the regulatory process takes 5. You can have Nvidia producing chips at record speed and still not have enough energy to run them because the electrical grid needs decades to be modernized. You can hire 10,000 construction engineers and still have to wait 3 years for the transformer that will power your data center. The physical world has its own laws, and those laws don't bend to market valuations of trillions of dollars. The deepest irony of this whole situation is that artificial intelligence, the greatest technological advancement in modern history, is being limited by the same physical constraints that limited civilization 100 years ago: electricity, water, raw materials, construction time. In 2025, Nvidia quadrupled its inventory compared to 2024. It went from about 5 million units in stock to almost 21 million. If demand was as explosive as the announcement suggested, why were chips piling up in warehouses? One explanation is that Nvidia itself was facing supply chain bottlenecks and was stockpiling what it could produce. Another explanation is that the actual demand, while enormous, was being overestimated by the grandiose announcements companies were making to the market. Probably both things at the same time. And when Bloomberg reported in April 2026 that Oracle and OpenAI had paused the expansion of their data center in Texas, it wasn't a surprise to those paying attention. It was just another piece of data confirming what the numbers already showed. Physical reality was prevailing over digital projections. So, where does that leave us? Artificial intelligence isn't going away. That's important to say. The models keep improving, the applications keep expanding, the value created is real, but the growth trajectory that the market has priced in, that curve that goes infinitely upwards, is encountering resistance that no language model can predict, the resistance of the physical world. And this resistance is not a bug, it's a characteristic of reality. Each more powerful generation of chips needs more energy to run. Each new, more sophisticated AI model needs more servers to train on. Each additional server needs more cooling, more water, more space, more electricity. And each additional megawatt of electricity requires more generation and distribution infrastructure, which needs more time to build, which needs more regulatory permits, which needs more physical components, which needs more raw materials. It's a chain reaction that extends back to the real world, back to the copper mines, back to the transformer factories, back to the water reservoirs, back to physics. Human civilization built the internet upon infrastructure that was developed over a century. Fiber optic cables installed over telephone lines that had existed for decades. Data centers connected to electrical grids that were slowly built up over generations. The digital has always relied on the physical. And now, for the first time in a long time, the digital world is advancing so fast that the physical world simply can't keep up. If you want to share your opinion on this, leave a comment below. And if the video made you think, a like really helps the channel grow and continue bringing stories like this. The question that remains, and which no Silicon Valley CEO can answer with certainty, is simple. Can the world build physics quickly enough to sustain the digital revolution that is already underway? It's not a matter of will. It's not a matter of capital. It's a matter of time, of resources, of reality. And the deepest irony of this whole story is that the intelligence we are trying to create at any cost, the intelligence that is supposedly going to solve all of humanity's problems, is being hampered by the most human problem of all. Building real things takes real time, and time doesn't move at processing speed. If you want to understand how we got here and what might happen next, the next video on this channel will give you even more pieces of this puzzle. It's playing on the screen now, and I guarantee you'll come away with a completely different perspective on the future of technology and the global economy. Until then,